Thank you so much for joining us here on a Thursday. I'm Marlon Bowling with you, and well, we're going to be taking a look at the setup for today's trade with the one and only Brian Hoops. He is with Midwest Market Solutions. In fact, he's the president of Midwest Market Solutions, and he joins us right now. Brian, I scanned the wires a little bit ago, and a couple of things. I did not see any flash sales reported overnight. Obviously, I didn't see any weekly export sales numbers this week because that is an ongoing, as Suzanne alluded to earlier, a debacle that's been going on for like 3 weeks now. Maybe we'll get some numbers in a week or so, fingers crossed, but I don't know how long we can go without any data like that. So, Brian, what are we going to trade on today if that's the case?
Well, good morning, Marlon. Yeah, you mentioned the export sales or lack thereof. Since the reporting system went down almost a month ago, I believe we've had 7 flash soybean sales and 1 corn sale. That was yesterday. So, we've had a few sales, and it'd be interesting to see how the USDA accounts for those. And when they dump all this, it's going to be a big dump next week if they do, in fact, come out with those export numbers. So it'll be a big dump. The market will, have to shift through that and take some time. But for right now, I think we're looking at what is happening with the dollar. We hit yesterday new 20-year highs. We're again firmer here this morning, and then we start positioning for Monday's supply and demand report. That report's kind of sneaking up on us. We don't have a lot of time to trade it this week and today. And then tomorrow. Then the report's kind of on top of us already. And trade estimates are out now, so we see corn yields down almost 3 bushels per acre, with soybeans down almost 0.5 bushel per acre. And there's some argument that maybe soybean yields are going to increase. I don't know that we've had a perfect end to the month of August, but it's been decent enough to at least to keep yields from really falling. But the corn number is one I think people will be watching closely, because it puts your production down right near 14 billion bushels. USDA has projected us to use about 14.5 billion. This is a year we're going to see a drawdown in ending stocks compared to previous years.
So overnight on this corn market, we had the December contract going down 4 cents, and we were at 6.67 per bushel here. Now, on our quotes provided by Bar Chart, when we switch over to soybeans, interesting how they just got so extremely quiet as we got toward the morning here. November had been around 13.97 and a quarter overnight, and we finished up the overnight trade at 13.82 and a half. Well, heck, that's only 2.5 cents from our low of the overnight trade. So we finished up the overnight session just a penny lower. So kind of quiet there. Now on the wheat market, this is the one that has been on fire earlier this week. Well, overnight, it had its issues. It sold off for a while, and then you had December Chicago wheat actually coming back, and it finished 5 cents higher at 8.49 and a quarter, which would be 12 cents off of its earlier low of the evening trade. I thought that was interesting. Meanwhile, in Kansas City, we have December 5 3/4 higher at 9.07 and a quarter, about a nickel off of its overnight high. And spring wheat in Minneapolis, we had December 11 and a half higher at 9.11 and a half as it comes down the home stretch of harvest here this year. Cotton market, by the way, December was up 157 points at 103.19 in that overnight session there. So well off of its earlier low too, by about 160 points. So this wheat scenario here, we're looking at a lot of active planting over the next 2 to 3 weeks or so. Weather will be kind of important in that regard, Brian.
Oh, absolutely. Yeah. We saw just very early stages of the winter wheat plantings, but it'll really start ramping up here in the next week to 2 weeks. We'll plant wheat from anywhere from Texas all the way up into Montana. They'll be planting wheat here very soon. We get a little bit more moisture, a little change in the weather patterns as things cool off, and so that's going to be something the trade will be watching. I think we probably need to put in a little bit of a weather premium to incentivize producers to plant this wheat crop, especially if it does remain dry. So we've seen from a technical standpoint, just some moving average crosses. The 21-day crossing over the 40. Sometimes that's an indication to some of these traders that have been short the market. Let's cover shorts, and I think we're starting to see that in the wheat market. So even though you have a higher dollar, not really much in the way of any export business, the market's starting to look ahead to the planting numbers that you talked about, plus some technicals that are starting to improve as a way to get out of some of these short positions, put a little premium into that wheat futures.
Okay, we'll talk about livestock when we come back in just a moment. Our guest, Brian Hoops. We'll be right back. Well, we're back talking with Brian Hoops, and Brian and I was looking at the wire this morning trying to establish any cash cattle market activity yesterday. And, you know, I saw maybe a few dozen head that seemed to sell at the low 140s once again, but it definitely was not enough to establish a trend. At least I don't think. I just wondered what you had heard.
Yeah, I'm hearing the same thing. Not enough really to say that this is the trend of the market. We came into the week expecting to see steady to, a little bit firmer type trade because the Packers going to buy for a full kill week next week. So we did see some light trade in the north at 146 live. That's $1 to $3 better than a week ago. In the south, 141, which is just steady. The show list numbers that were assessed earlier are a little bit larger, especially in the southern trade. So I think we will see additional trade today. It's probably going to be at that steady to slightly higher level. And that could give us some hedge lifting in the live cattle futures. Feeder's probably going to start off on the positive side here, 20, 35 cents. Better with the lower corn prices, and that's also going to spill over into the live cattle and give us a little bit firmer start.
Yeah, you would think the Packers can't hold out forever. They're going to have to get some inventory here sooner or later. But let's take a look at where we finished up yesterday on the live cattle board, all right? On the live cattle trade, we were lower. The October contract, the nearby, was down 80 cents. We closed at 144.25. That was off of its high of the day by about $1.25. So not a great close yesterday over on the live cattle. On the feeders, we had that October contract going down $2.15 yesterday. It finished up the session at 183.95. We'll see if they can regroup today or not. And on the lean hog trade, we had yesterday's session wrapping up with October just one tick lower, 2.5 cents to the downside at 91.07. December was up a dime, and interesting how the deferreds were 30 to 60 higher when we closed. Well, Brian, thanks for all the information. I appreciate that, sir. You have a good trading day out there. Brian Hoops of Midwest Market Solutions. So the table is set. Suzanne, back to you.